to read any chart, so that even when I'm not around to give you signal to trade, you can just jump into any chart and you'll be able to analyze it and take a trade and make profit for yourself, right? We are in a bull market, and this is a very good opportunity for you to jump into the market and make some profits on a daily basis, even on a weekend. So right now, let's just dive into the charts. I will try to analyze the Bitcoin chart so that you see how to analyze any market, because this can be actually be applicable to any cryptocurrency or even any forex pair. All right, so this is a very valuable skills. Once you know how to do this, you are very sure to make consistent profit trading cryptocurrency. All right, so let's dive into the charts while I try to analyze the Bitcoin chart and teach you how to do so for yourself. Okay, so this is the Bitcoin chart. As you can see, this is BTC USDT, and this is the 4-hour time frame. All right, so this is actually a trading view. This is not my forex broker interface, right? This is trading view. So what we have here is similar to what we have in the forex broker interface. So we like using trading view to analyze the market. Then you mark your entering level, you mark your stop loss, then you move over to your broker interface, then you place the trade over there, right? Okay, so this is the 4-hour time frame. We have the 15 minutes time frame over here. This is 15 minutes time frame. This is 1 hour time frame. Then this is 4-hour time frame. All right, so I just want to analyze the 4-hour time frame, but you can actually use the same principle because it's applicable to all time frames. All right, so it is I zoomed out a little bit so that you can see the chart clearly, because we can actually zoom in. Let me try to zoom in so that you see. All right, let me zoom in. Okay, when we zoom in, all right, so this is where we are presently. The price of Bitcoin presently is at $67,392, right? So it actually, all cryptocurrency dumped from last night. All right, so we are here now. Okay, so I just want to, let's go back so that you see a clearer view of where we are. All right, so this is where we are. So when you see a chart, the first thing you need to take note of is where the price is presently. Then you trace back to where it has been for some time, right? So this is where the price is. So it has been like this, it has been like this, it has been like this, and continues. All right, continues backward. So we can start from anywhere reasonable to analyze it. So for the for the purpose of this tutorial, I will actually want to start from the lowest level for my screen. This is my screen, so this is the lowest level, right? So as you can see, it goes up and comes back down, right? Okay, let me try to get the path. Let me try to get the path indicators so that we'll be able to analyze it properly. Okay, now the path is here. Okay, so we're starting from this lowest level. Like I said, you can start from anywhere. All right, so it goes up, comes back, then it went up this way and came back this way, then went up this way, came back this way, went up this way, came back this way, went up this way, came back this way, went up this way, and now we're here, right? Although it looks confusing, right? It doesn't follow the classic upward pattern. Let me show you the classic upward pattern. Normally we have 3 type of scenarios. You see that it's going up. This is what we call upward trend. This is upward trend. Okay, this is okay. So this is like a upward trend. This is a bullish trend. What it means is that the price started from this level, it went up, then there was a retracement, right? A retracement means the price was higher than where it ended at. So the price went up and it retraced a little bit. It now went up again, then retraced a little bit, went up again and retraced a little bit, went up again and retraced a little bit. So basically, in a bullish market or in the upward trend, this is what is expected. The price doesn't just go up on a straight line. No, it goes up maybe a day or two, then it has to come back a little bit for a breather before it goes up again, right? This is the classic scenario of all markets, whether in cryptocurrency or in forex trading, whichever. A bullish market always goes up, then there's a retracement, right? So from what you can see now, we're having, this is the highs, we have another higher high, we have another higher high, we have another higher high. All right, so for this trend to continue, for this upward trend to continue, what we are expecting is that this upward, these higher highs will keep on forming and higher lows will keep on forming. So for the upward trend to continue, we keep on having higher highs and we keep on having higher lows. These are the lows. This was low, this is higher low, this is another higher low, this is another higher low. What this simply means is that this low is higher than the previous low. This low is higher than the previous low, and this low is also higher than the previous low. So we call them higher lows, higher lows, higher lows. All right, so for us to have a bullish trend, you need to be having a higher high, higher high, higher high. I will also need to be having a what? A higher low, higher low, higher low. Right? So this is the bullish market basically. All right. So this is one scenario. So there is another scenario of a bearish market. So get the back key. So the bearish market comes this way. We start from somewhere like this. It will come down. Right, then it will retrace, then come down again, then retrace this again, then come down again. All right, then it will continue like that. Okay, so what we can see from this bearish trend or this bearish market was that the price was here, right? It fell down and it has a retracement as if it was going up. It fell down again and has another retracement as if it was going up. It fell down again. Basically, we're expecting another retracement as if it will be going up, then to fall down again. So this is what called a bearish trend or a descending trend, right? So this is bearish. So this is second scenario. Then finally, the third basic scenario is when we have a market that is just going on a horizontal level. It will go up, it come back to almost the same level, then goes up to almost the same level, then come back to almost the same level, then goes up to almost the same level, then come back to almost the same level, then goes up to almost the same level. So this scenario usually happens when market is closed, like during the night, when the big banks are not actually trading. So this is when we have, most times we have this kind of scenarios. The price will be down here, it will go up as if we want to have a bullish trend. Before you know it, it will come back again to almost the same level it started from. Before you know it again, it will go up again, then comes back. So those scalp traders, what they do, they just scalp the market. So once you notice this kind of trend as a scalp trader, all you need to do is that you wait for it to come back to the base level, which is called the support zone. So when we have this kind of markets, what we usually do is to have an horizontal line. We draw a horizontal line. So what we usually do, we say, okay, this is this horizontal line here is now called the support, right? Then we also have another line that we call the resistance. Okay, so we have another line up here, we'll call the resistance. Then this line down here, we'll call it a support, right? So the price will be at this level. So what we do, once we see this kind of trend, we wait for it to fall back to this support level. This is called support level, this is called resistance level. It's supporting the price from falling down. This one is resisting the price from going up, right? So once the price goes up to this resistance level, we usually take profits, right? Or at this particular level, we sell the market because we're expecting it to fall back to this level. So when it fall back to this level, we close our sell trade and open a buy trade. When it goes up to this level, we close our buy trade and open a sell trade. So this way we are scalping a market, right? You are scalping it, you are taking small profits. You place your trade, your buy trade here. When it gets here, you close the buy trade. Then you place your sell trade. When you come back here, you close your sell trade, then you place a buy trade. When it goes back here, you close your buy trade and place a sell trade. So you just continue it like that and continue making some profit, right? So this is another scenario. So like I've said, now we have three basic scenarios that I just illustrated, but what we are talking about now is actually mostly going to be bullish scenario, because we're in a bull market and most cryptocurrency, if not all of them, will actually move up in price, right? Okay, so as you can see, this trend is not a classic trend. This is an upward trend. This is a bullish market. This is an upward trend. How do I know? If we started from here, the price was starting from $56,000, right? And now look at where we are. The price is at $67,000, which is the price increases. So when the price increases over time, we call it a bullish market. It's an upward trend, right? But it's not a classic upward trend like the one I illustrated initially, right? So since it's not a classic upward trend like the one I illustrated initially, there's another way for you to be able to read the market and know when to place your order. And the way to do that is to take a trend line. You see it? It's called trend line. You pick a trend line. Then you start from the lowest, from where you can see, right, from your interface, from the screen. You start from the lowest, then draw a trend line that will be touching the base. You start the base of the first where you're starting from. It touches this base, then you move up this way. Okay, so this is the trend line. So as you can see, this is our trend line, and it is what? A upward trend. So what this simply means is that we're expecting the price to go up, come down, go up, come down, then go up. So if you look at it in a rough sketch, this is the kind of scenario we're seeing. So that is why I say, as a trader, once you keep on doing this, you get used to it. There is a pattern that comes to your mind the moment you look at a chart. Once you've seen it several times, it becomes part of you. There's a pattern that just comes to your mind. Once you just see it, it just comes natural. That is something that I cannot teach you. You just have to keep on practice to get to know about it. So this, even though this is not a clear-cut upward trend, or it's not a clear pattern, textbook-like kind of bullish trend, this is still what we have. It goes up, it comes back, it goes up and comes back and goes up. This is still what we have. Okay, in case you are doubting me, let me draw it here. You pick it up again. It goes up from here, it went up and came back here. This is where it touched the trend line, and now it has gone above the trend line, and now we are touching the trend line again, right? So from this scenario, what are we expecting to happen? Of course, we're expecting it to bounce back up, right? So even though it is not a classic up down up down up down pattern, it is still following the same pattern, but not in a classic way, right? So your ability to be able to figure out how this pattern goes is very, very important, and this comes from practice, right? So but what you should do to make it easy for you, you pick the lowest level from what you can see from this screen. The lowest level is here, and we pick the present level where we are, which is here. Then draw a trend line that will touch from the lowest level down to where we are, right? So this trend line touched it. It touched it at this point, it touched it at this point, and now it's touching it where we are presently. So what is expected according to this trend line, if this pattern is true? Let me show you the pattern. If this upward pattern is going to continue playing out, look at this upward pattern. It goes up, come down, goes up, come down, then goes up. If this pattern is going to continue playing out, what we're expecting to happen is that this is where we are, right? We're here now. So what we're expecting is that at this particular point in time, we're expecting the price to shoot up back, which is what this arrow is indicating, right? So we started from here, it went up here, come back here, it goes up here, and now we are here, right? So it's expected to bounce back after hitting this line, then it move back up to a new all-time high. This is for Bitcoin. All right, so what you should do, what I advise my students to do most times is, once you see a particular pattern like this, what is expected to do is, you first of all pick where we are, which is the low where we are. Then if you want to take a trade at this particular point in time, at this particular level, your stop loss should be just below the previous low. All right, so like I said initially, we have a pattern. Let me bring back these patterns so that you get it clearly. Okay, we have a pattern like this: up, down, up, down, up, down. Then we are expecting it to move up this way. Okay, so we have a pattern like this. The price went up, it came back down with increases or pullback, went up again on another pullback, went up again on another pullback, and we are around somewhere like this, right? So the general principle is that if you are going to place a trade and you are going to put your entry level at this particular point in place, at this particular level, then your stop loss should be just immediately above this previous low, because as it is now, this is a high, this is a higher high, this is a higher high, and this is a low, this is a lower, this is a higher low, this is a higher low, this is a higher low, right? So for this upward trend to remain in place, for this market to still remain bullish, we need to have another higher high that is higher than this. So what we are expecting to form is to form a higher high that is higher than this. Just like when we're here, or when we're here, we form a higher high that was higher than this, right? So we're also expecting to form another higher high that will be higher than this, right? And for this particular trend to remain the same, what it means is that we are supposed to form a higher low, because this was a low, this is a higher low. We are supposed to keep on forming higher lows, higher lows, higher lows, and we have to keep on forming higher high, higher high, higher high. All right, so now we are here. So if you want to put your stop loss cannot just be any, you cannot just assume any number and take it as your stop loss. No, like although some new traders want to have a win to risk or risk to reward ratio to be 1:20 or 1:200, so that once they win one time out of 200 times, they know they're going to be profitable. But they forget that if you're having a high risk to reward ratio that way, it will increase your probability of hitting your stop loss. So that means you keep on losing so many trades that if eventually you should even win, it will not be insignificant, right? So that is actually unrealistic. So the best way to do it is to start with a risk to reward ratio 1:1, right? To start with a risk to reward ratio to be 1. So what you do now is you take your this is where, since we are longing the market, or we are buying the market, right? So you take your long position. This is your long position. So you take your long position, then we are placing, this is where the market is, and this is our entry level. All right, so you place it this way. So once you click it, automatically this long indicator will appear here. So what you can see, oh, I hope this can come out clearly. Okay, let me try to bring it this way. Okay. Alright, so what we can see here is that the moment you hit this place, you will see that the long indicator has already given us a risk to reward ratio to be 1:1, although you cannot see it clearly at this point, but that is what it's giving us, right? So it has given us a risk to reward ratio 1:1. What it means is that for it to move to your stop loss, the distance that you take for it to move to your stop loss is the same distance you take for it to move to your take profit. That means the probability of hitting your stop loss is now 50-50. You're right? So probability of hitting your stop loss is 50% of the time it must hit your stop loss, basically. Then 50% of the time it's supposed to hit your take profit, right? So on a basic level, even without reading the charts, it's a game of probability, right? But since we have the odds in our favor, why? Because we are actually reading these charts, and we have already noticed, or we have already analyzed the market to be in the upward trend, right? So because of that, our probability of hitting our take profit has now increased. Because on a normal playground, without reading the charts, if you want to do it a game of probability like a toxin a coin, 50% of the time you get a head and 50% of the time you get a tail, right? So if you're using a risk to reward ratio of 1:1, what it means is that even if you just blindly choose that, oh, I want to buy now, oh, I want to sell now, 50% of the time you're going to hit your take profits if you're using 1:1. And 50% of the time you are going to hit your stop loss. It is just a game of probability, meaning if it tosses a coin 50 times, half of the time is going to be head and half of the time is going to be tail. If you toss a coin 10 times, 5 times is going to be head, 5 times is going to be tail. But how those 5 times will come, it varies. It doesn't mean that once it's head, now the next one must be tail. No. What it means is that after you finish the 5 or the 10 throws, 5 of them will eventually be head. How the head can come, it can be first head, tail, head, tail, head. You understand? It can come in different fashion. But what it means is that at the end of the complete 10 throws, you are going to have a probability of 50%, right? So on a basic level, you are going to have 50% probability, right? But what we are doing by analyzing this market is just to increase our probability by a little bit more than 50%. And how are we going to do that? We do that by first and foremost trying to read the charts, trying to analyze that, okay, this is a bullish trend. That one has actually increased the odds in our favor. That is number one. And secondly, we've also analyzed it that this particular market has actually come back to hit our trend line, right? Since it has come back to hit our trend line, it is in more case than none supposed to go up, to bounce back, because in a normal bullish trend, when it comes up, it will retrace a certain level, which is most likely going to be the trend line, or even before the trend line, then bounce back up. What that means is that the price will go up, it will come down. You see, at this particular point in time, it didn't even hit our trend line before bouncing back up, right? But it is expected not to come back above or below this trend line, because if we break above this trend line, then we know that this upward trend has been broken, right? So this trend line is like a resistance. It's a resistant line that it will prevent this price from falling below it. So if the price should close below this resistant line, we know that this trend has been broken. Then we'll start looking for a way to short the market, to sell this particular cryptocurrency. So, but as long as this trend line is not broken, we know that we are still in the upward trend, right? So that is what happened basically. So now to increase the odds to our favor, because on a basic level, 50% of the time we're supposed to win and 50% of the time we're supposed to lose. What it means that if you invested $100, you are supposed to lose $50, you're supposed to gain $50. So at the end of the day, your account balance will remain $100. You have not lost anything except for the transaction fee, right? So, but if you want to increase your probability of winning by a little bit more than 50%, because even if the probability of winning is 55%, that means you're winning 55% of the time and you're losing 45% of the time, you are still going to be profitable, because just that 5% difference is something. 5%, 5%, 5% on a daily basis, it will pile up, or it will cumulatively become something over time, right? So to become a successful trader, all you just need to do is to try as much as possible to increase your odds of winning by a little bit above 50%. And how can you do that? That is all I'm just trying to say. How are you going to do that? By increasing your odds, or how are you going to do what are you going to do to increase your odds of winning by a little bit above 50%? That is all you just need to be a consistent trader, or to be a consistently profitable trader. You just need to increase your odds of winning by a little bit above 50%, because if it's 55%, that 5% winning every day. Imagine winning 5% every day, adding 5% to your capital every day. It is something. Over time, your capital will keep on increasing. Over time, you keep on becoming a successful trader, right? So what we want to do now is to increase our odds of winning by a little bit above 50%. And how are we going to do that? Like I said, the first thing is to analyze the trend of the market. Why? How do we do that? We find out that, okay, the price of this particular cryptocurrency is now at this level, and where it was lower than where it is now, so it's upward movement, right? Then you try to get a rough sketch of this upward retracement, or up retrace, or up pullback, this pattern. You need to visualize this pattern on any chart. This is what upward trend. So if this particular chart is a upward trend, you're supposed to be able to visualize this pattern in it, even though it will not come a clear cut like this, but you're supposed to be able to look at it. It came this way, came 1 year now, right? So we're expecting it to go back up, right? So basically, on a basic level, this is how it is. So now we know that this thing is going to move back up, and now we are going to put our buy here. All right, so let me cancel this and put it in the market itself, so that you see how it goes. So I cancel this. All right, let me cancel this too. So I want to put it on the market, so that you see exactly how we do it. So if this be the case, right, it started from here, it went up, then it's the trend line, it went up again, and now we are here. So if you want to follow that principle, the one I said initially, let me reverse that a little bit. The one I said initially, that you are supposed to, if you are buying at this level, your stop loss supposed to be a little bit below this previous low, because we are expecting the new lows that are forming not to be lower than the previous low. Because once you start having a lower low, that means the upward trend has been broken. Once you start having a lower high, the upward trend has been broken. For us to continuously having this upward trend, we keep on having what, a higher high, and higher high. Then we also need to keep on having a what, a higher low, higher low, higher low, higher low. So you have to maintain that pattern, or the charts need to maintain that pattern, right, for it to remain bullish. So what we need to do as traders is to, once we are placing our trade at this level, we are supposed to make sure our stop loss should be just below this previous low, right? So if that's be the case, if we're applying it to this market, it went up this way, it came back down, it went up again, and now we're hitting the same trend line. All right, so what we're expected to do at this level is to let me cancel this, is to place our long position. Why are we placing long? Because it's what, upward trend. In upward trend, you place you place a long position. That means you are buying the market, right? So why we are buying the market at this level is because we know for a fact that this is a upward trend, and this particular market has hit our trend line, and we're expected to move back up, because if we should break this trend line and close below this trend line, we're expecting to have a bullish trend, right? Or this we're supposed to have a bearish trend, and this bullish trend has been broken, right? So with that being said, we're going to place our trade here, and our stop loss, which is fixed by the way, will now be just below this. Okay, let me cancel this so that we'll get a clearer picture of this. Okay, so this is pattern, right? Although it's not a clear cut, but this is how it is in a rough sketch, because like I said, you have to be able to visualize it in the market. You have to have a rough sketch of how the market is. It went up this way, it came back down, it went up again and came back down, and we are here. So we're expected to go down here. So although this candlestick doesn't follow the exact pattern, but in a rough sketch it follows it. You see, it went up, it came back down, it went, you can see the real candlestick came down here, but eventually it went back to this level, and now we are here, right? So now what we're expecting to do now as traders is to take a long position. Like I said, we're taking a long position because it's a bullish trend. Then you place it here. So once you click it, automatically you see our risk and reward ratio is what, is 1, right? So what I'm saying is that if you use this risk to reward ratio of 1, you are almost likely going to be profitable 50% of the time, and losing your trade 50% of the time if you are not analyzing the market, right? Because it's like a tossing a coin, right? 50% of the time you will be head, and 50% of the time you'll be tail. If your head is winning, 50% of the time you'll be winning, and 50% of the time you'll be losing if you're not analyzing the market. But the reason why we're analyzing the market is to increase that odd from 50% to maybe 60%, 70%, 80%, right? That is what we are going to do, or that is what our intention is by analyzing this market. So now that we've analyzed this market, I will see that this is a bullish trend, right? And now we know that we're going to buy. And where are we going to buy? We want to buy where the market is, because in a good position to buy. And now we are placing our what? Our long position. And now we know that we're going to use a risk to reward ratio of 1:1. So what it means is that wherever our stop loss is, that distance from this particular entry price to our stop loss is supposed to be the same distance from that particular price to our take profit. That is what risk to reward ratio means. But like I said, our stop loss is a fixed position. Where our stop loss should be is supposed to be fixed, because it's the trend line that, or the pattern of the market, that will determine where the stop loss should be. And that is the position that is just immediately below the previous lows, right? So this was where the market is. It went up, it came back down, went up, came back down. Here we are. As you can see, this is a low, this is another low, this is another low. So where we are now is regarded to be another low, because the market was a little bit higher than it before, and it has a pullback. So we are here now because we had a pullback, right? Just like when it was here, it went up, we came back here because we had this pullback. It then went up again, and now we came back here again because we're having what? This pullback. And now this particular thing is not a high, it's a low. This was the high, this is a low, this was the high, right? So now we are in a low, and when you are buying a upward trend, or you want to buy a market, the best place to buy it is at the low, right? You buy it at the low because what we're expecting at that particular point in time is something higher, right? Because if you had bought at this particular level and we're having this retracement, what it means is that your account will have been in red when it came back to this level. Because once you buy a market and there's a pullback, your account will be in red. If you are using a very high leverage, your account can even get liquidated, right? So that is why I say once you are reading a market, you must make sure you are buying at the low and not buying at the high. So what it means is that you are not supposed to buy here, you're supposed to buy here, right? Although it's not a clear cut to know when this is when we are here or when we are here, right? So but what you should know for a fact is that you have to be able to get a rough sketch of this trend line, and you have to get a rough sketch of where the highs is and where the lows are. So these are the lows, these are the lows, these are the low. Where we are now is a low. This was the high, this was the high, and we're expecting another what high that is higher than this previous high for this bullish market to remain in place, right? So with that being said, once we place our long position, so what we're expecting to do now is to draw this our stop loss. This where this red box end is where our stop loss should be. So we have to extend it because we want it to be just immediately below this previous low. This was the previous low, so we're expecting to be just immediately below this previous low. So this was the previous low, so we want to keep it somewhere here, right? So if you look at it very well, now that we've extended it, the red chambers, we find out that our risk to reward ratio has reduced to 0.45, right? That is not good. So what we need to do now is to increase the green part to make our risk to reward ratio to be 1, right? So if we want to increase the green part, we just extend it a little bit up. We extend it a little bit up. So let's check. It's 1.6. No, it's too high. So we'll reduce it a little bit. Reduce it a little bit until you get to 1. Okay. Alright. So 1.06 is still okay. Still like 1. Alright. So now if it's like this, what we are now saying is that we are going to place our entering level at $67,148, and we are going to place our stop loss at $60,289, right? And we're going to place our take profit at $74,591, right? So what we are saying by placing this trade is that we know for a fact that, or we feel for a fact that before this market can come down to 60 something thousand, it's most likely going to go up to what, 74,000. So for you to be successful in this trade, or for you to be profitable in this trade, there are two things you need to bear in mind. First and foremost, the leverage you are using. Do you think this particular leverage will be able to withstand the distance from here to this level, right? Because if your leverage, the leverage you are using, is not able to withstand this distance from here to here, what it means is that you're supposed to reduce that particular leverage, right? You're supposed to reduce that particular leverage, because from what we just analyzed, what we are saying is that this price for this trade to be successful, this candlestick will go up to get to 74,000 first, even before it comes down to 60,000. This is very important because eventually the price of Bitcoin will definitely still come back to 60,000. Do you know why? Because once we get to bear market, everything will fall back down, right? But why we are placing this is because we are saying that before that will happen, before it will come back to this level, it will first go back to this level. And when it goes first to this level, I will close the trade. It doesn't even matter to us if we go back to 20,000. It doesn't matter. We've already been profitable. It doesn't matter because already taken the trade, I've already taken out our profit, so it doesn't matter, right? So what matters to us by placing this trade at this particular level and using a risk of reward ratio of 1 and placing our stop loss of 60,000 and placing our take profit at 74,000, what we are saying is that the price of Bitcoin will first and foremost hit 74,000 before going down to hit 60,000. With that being said, we are actually increasing our probability of winning, because for us to place this trade, we read the chart that is in a bullish trend. And for us to place this trade, we read the chart that this is a low, not a high. And we also read the chart that it is on the trend line. So even if this price of Bitcoin should fall down to maybe around this level, but doesn't get to our stop loss, right? It fall down to around this level and shoot back up and hit our take profit, we are still profitable. We will still win in this market, right? So all that matters is that it doesn't come down to 60,000 before going to hit 74,000. That is all we are saying. That's the only thing that can happen for us to win. If it like, let it come down to just 61,000, 60,900 and move back up to 74,000, we are still winning the trade. But bear in mind that your leverage should be able to accommodate whichever retracement this can cause, right? So the price you are willing to pay for this particular trade should be reasonable enough, right? Because this particular trade can come back down here. I'm not saying it will come back down, but I'm saying that even if it comes back down here, but it doesn't get to 60,000, then move back up to 74,000, we will be profitable, right? So that is how you just read any chart. I don't want this video to be too long, so that is how you can just jump into any chart and analyze it and place your trade, and consistently you will be profitable. All right guys, I just thought I should drop that here to assist you to keep on making profit like this, because I've been making a lot of profits these days and I don't want to start flashing my profit in your eyes, but instead I want to show you how to be able to do it, so that you don't need to depend on my indicator to place your trade. You can actually on your own jump into any trade, analyze it, place a trade and make consistent profits. Alright, so if you like videos like this, you just indicate it in the comment section. You drop a thumbs up if you like it, and if you have any question, feel free to ask in the comment section and I'll do my best to respond to your question. I also have a free Telegram group. You feel free to join. It's in the link in the description or in the bio. Just click it and join to learn more about trading cryptocurrency profitably. Alright, so until next time, I will see you. Trade safe and trade smart, okay? Bye.